Hey, Stan the Annuity Man here, talking about taxes. Disclaimer, you should never ever accept tax advice from anybody other than a certified tax professional, tax lawyer, CPA, etc. Okay? This is a serious issue, so you need to deal with serious people. But with that being said, I'm going to go through the taxation of annuity types and how you need to make sure that you're making the right decision with what account to use, what type of annuity to use in that account, what taxes you're going to expect to happen. But once again, find that tax professional. And at the end of this video, hang in there with me because I'm going to tell you how to get my free books, and you can also get free quotes from us as well. So let's talk taxes. All right, tax man, let's talk about it. Let's go through the types of annuities and how they are taxed. So let's just take them one at a time. Single premium immediate annuities is a combination of return of principal plus interest, your lifetime income stream based on your life expectancy at the time you take the payment. Because it's in a non-IRA setting, a non-qualified account, it's a return of principal plus interest. You're only paying taxes on the interest part. So that's called an exclusion ratio. Same thing happens with a deferred income annuity used in a non-IRA account. Now, if you're taking those same two products, the immediate annuity or deferred income annuity in an IRA and using it inside of an IRA, then all of that income coming out is taxable. Any money coming out of a traditional type IRA is taxable. If you use it in a Roth IRA, it's non-taxable. Okay, so that's how that works. I know this is a lot. That's the reason I got all of the books ready to send you, and I'll tell you how to do that at the end of the video. Now, most annuity taxation, like on a deferred annuity, is taxed LIFO. Last in, first out is what the accountants talk about. And it's also used as gains first is a way to look at it. So let's just say you have a multi-year guarantee annuity and you've held it for a long time, and that's, by the way, that's a fixed rate annuity. You've been getting this fixed rate for a long, long time, and you say, I want to take some of the money out. I want to take, you put $500,000 in and you've been getting 4% on it. Now you've got $800,000 in there, right? And you say, hey, send me the money. So just send me $100,000. If it's in a non-qualified account, you're going to pay taxes on the gains first, okay? Does that make sense? Because it's LIFO, last in, first out. Same with fixed indexed annuities. So a lot of it comes down to what type of account the annuity is inside of. Think of the types of accounts, IRAs, Roth IRAs, non-qualified, as the house. Inside the house is the furniture. In this case, is what type of annuities are inside that house. And based upon that structure is how your annuities will be taxed. A very popular product out there, well, actually it's an attachment, is called an income rider. An income rider is a benefit for lifetime income that you can turn on in the future that you attach to either a variable annuity or a fixed indexed annuity. There's a lot of different types of income riders. Some are annuitized, like an immediate annuity, but the vast majority are what's called withdrawal type lifetime income riders, which are last in, first out, gains first. You're paying the taxes on the gains first of that. Now, you just have to know that. You have to know how that works, and your agent advisor, hopefully me, will explain that to you. But I recently got a call from a guy, and he said, I'm looking for lifetime income with non-IRA money. It's like in my checking account, Stan. I want to make sure that in 7 years from now, my wife and I have an income stream starting that we can never outlive. So I'm like, okay, that's what I call an income later quote, because you're looking for income later. And again, that income stream is based on your life expectancy, primarily at the time you take the payment. People say, isn't it interest rate based? No, it's life expectancy based with interest rates playing a secondary role. So he said, in 7 years we want the income. Great. So what did I quote him? I quoted him a deferred income annuity because it's non-qualified, and I quoted him an income rider. So I went to all the carriers, I quoted all the deferred income annuity carriers, all the income riders, and then I showed him the numbers. Now, this is where it got interesting. I said, okay, I need you to look at the deferred income annuity number, and then I need you to look at the income rider number. Those were the totals, and they were really, really close, like within $30, $40 a month of lifetime income stream. I said, but here's the catch now. Here's the catch. The deferred income annuity, because it's a combination of return of principal plus interest, a vast majority of that income stream will not be taxable. So from a time value of money, maybe that deferred income annuity makes more sense than the income rider. But, I said, but that doesn't mean it's a pound the table reason to buy the deferred income annuity. This is where the education, my books, the videos, and us having a good conversation comes in, not just buying the sales pitch, right? Because the income rider has its value too, because it, even though it's taxed a little differently than the deferred income annuity, you have a lot more flexibility starting and stopping, controlling the asset, etc. So what did he do at the end of the day? Because both of them have good benefit propositions, he split the money right down the middle, bought half of it in a deferred income annuity and the other half in an income rider. That is not having your cake and eating it too. What that is taking advantage of the benefit propositions of both of those, but both of them are taxed differently with the income stream coming out, but he knew that going into the contract. Okay, so since we're talking taxes, let's talk about life insurance, because annuities are issued by life insurance companies. But life insurance is taxed differently than annuities. Huh? What? Yeah. I always tell people life insurance is the best return on investment you'll never see because you'll be dead. It's a great product. I don't sell it. I have tons on Stan the Annuity Man because I live a risky life doing these videos all the time and flying around. But I do have life insurance. Now, the taxation of life insurance goes lump sum, probate free, to your beneficiaries, tax free. But annuities that are issued by life insurance companies, those are taxable. Which, again, how's that work? Well, annuities are guaranteed issue. You don't have to go through any type of medical testing, etc. with the vast majority, 99% of them are guaranteed issue. So let's just say that you bought, you couldn't qualify for the life insurance. You could buy what's called an income rider that has a death benefit on it for your beneficiaries, but that death benefit is going to be taxable, whereas the life insurance side is not taxable. Food for thought, as you're planning on your death, your demise, your legacy, those are things to keep in mind. Now, once again, if you're talking taxes and you're really concerned about taxes on your overall portfolio or with annuities, please see a qualified tax professional. Do not allow an agent or advisor to be that person unless they have law degree behind them, right? Or they're a CPA. So, that's very, very important. I mean, I've been doing this for a very long time and I know it backwards and forwards, but I still defer to the tax lawyers, especially in your state, because there might be something, I'm licensed in all 50 states, I don't know about in those states. So hopefully that's helped you understand kind of a 30,000 foot view of taxes and annuities. I know I've gone pretty fast, and all the stuff I missed are in my 6 owner's manuals, of which I will send in this gold foil package to you. But first of all, hit the subscribe button. It's pain-free, it's painless, and you should do it as a gift to me, because I've spent all this time educating you. And I'm going to be releasing videos. I'm going to lead the league. I'm going to lead the league in videos. Whatever league that is, I'm going to lead it. In fact, I told someone the other day, I want to be the #1 unless our equipment fails us. And that was what you just heard. Don't worry about it. We just picked it up. Is it broken? It's not broken. We're good. So, going back, hit the subscribe button and then hit the more info button underneath that, and you'll see a place where you can hit a link to go fill in your information for these wonderful books that are informational and continues your annuity education on your terms and on your time frame. And also don't hesitate to contact us at stantheannuityman.com if you want to see a specific quote or if you want to have a discussion about your specific situation. See you next time.